I just found out something that really shocked me. There are three assets that millionaires are quietly buying up right now, and almost nobody's talking about them. Now, they aren't what you think. They're not crypto, and they're definitely not any type of get-rich-quick plays. These are cash flow machines that pay you every single month, whether you work or not. And these same assets are actually what helped me get to the point that work is optional, even as a periodontist, even while working part-time. Now today, I'm going to break down exactly what they are, why millionaires love them, and how you can start owning the exact same ones. Do me a favor, gently obliterate that like button for the YouTube algorithm, because this might be the most important video that you watch this year. Let's get going to asset number one, and it's my personal favorite, real estate syndications. Now, when most people hear real estate, they think of single family homes, they think about maybe duplexes, maybe a rental down the street. And sure, that's fine, but it also means tenants, toilets, and a second job you don't have time for. Who wants to treat patients all day and then deal with tenants when you get home? Not me. Syndications are totally different. Here's how they work. A group of investors called limited partners or LPs, they go together, they pool their money, and they buy a larger income producing property. Things like RV parks and mobile home parks, which are my favorite. And now, instead of managing the property yourself, you invest passively while a professional team called the general partners or the GPs, they're the ones that handle everything. Acquisitions, management, tenants, even all the headaches that goes along with it. In return, you get true passive income. Now, there's all kinds of different deals out there. Here's what a typical deal looks like if you invest alongside of us in a mobile home park or an RV park. Typically, the minimum investment is around, depending on the deal, $50,000 to $100,000 for an accredited investor only. The whole time is anywhere from 5 to 7 years. Next, the cash on cash returns anywhere from 8 to 10%, again, depending on the deal. And the target equity multiple is around 2x over the whole period, meaning whatever your investment is, we're looking to double or 2x that investment over the whole period. So let's say you invest $100,000. Now you could earn consistent cash flow each year during this whole period, 5 to 7 years, and then double your money by the time that the project goes to a cycle or sells. That's how a lot of the high income earners start replacing their active income with passive income without managing properties, flipping properties, or doing more work. And here's the best part. These investments also come with huge tax advantages. They don't teach us that in school. Like two things, depreciation and cost segregation. These can basically wipe out any taxable income that comes from these types of investments. Again, they don't teach us this in school. More than likely, your financial advisor hasn't told you anything about it, and probably your accountant hasn't told you about it. Mine didn't, so I had to learn on my own. Now I'm turning around and teaching you. So in this whole situation, you're not just earning passive income, you're keeping more of what you make. So if you've ever wished your money could work as hard as you do, syndication is where it starts. Now, let's move on to asset number two. This is one that you can buy right now. You can actually pick up your phone, go online, right from your brokerage account. And these are dividend-paying exchange-traded funds, or ETFs. Here's how they work. Some companies, they actually share a portion of their profits with their shareholders. That's called a dividend. A dividend exchange-traded fund bundles dozens or even hundreds of these companies into one simple fund. So instead of you betting on a single stock, you own a basket that pays you regularly. And the best part, you don't have to try to figure out how to pick a winner. You just collect income. As of right now, here are the three most popular dividend ETFs right now. Number one, it's called the Schwab US Dividend ETF, and it goes by the symbol SCHD. This is probably one of the most searched for on YouTube and online. If you just type in SCHD in YouTube, there's tons of videos on it. It's like a fan favorite. Why? Because it has consistent payouts, solid growth, and low fees. It's like the blue chip standard for dividend investors. Number two is the Vanguard High Dividend Yield ETF, and it goes by the symbol VYM. This gives you exposure to dozens of the biggest US companies that pay dividends. It's simple, it's reliable, and it's really built for the long game. And last but not least is a JP Morgan fund. Again, it's one of the most popular ones if you go and search for it on YouTube. It's the JP Equity Premium Income ETF. Symbol is JEPI, JEPI. And this one's a little bit unique because it uses what's called a covered call strategy, which means it actually can use options to pay out higher monthly income, often around 7 to 9%. So together, these three ETFs, they can actually build a very strong foundation of, again, hands-off passive income that hits your account every single month or every single quarter, even when the market's flat. And then if you reinvest those dividends, that cash flow can start to snowball and compound over time, turning really small checks into real wealth over the long haul. I personally use these types of ETFs alongside my real estate investments, plus I have some growth funds as well to balance risk and keep cash flow steady year-round. Now, the third passive income stream is actually probably the most boring, but it also pretty smart right now, and that is this: U.S. Treasuries. When you buy a treasury, you're actually lending money to the U.S. government. In return, they pay you interest guaranteed. It's basically one of the safest ways that you can earn income. And right now, depending on when you're watching this, it yields around 4 to 4.5%, depending on how long you lock these in for. That's a lot higher, as you know, what most banks are paying or savings accounts are paying right now. And your principal that you put in is backed by the U.S. government. You can actually invest in two different ways. You can go to treasurydirect.gov. This is where you can buy T-bills, notes, or bonds directly from the government. And then there's some ETFs out there, and I'll just throw up a couple of symbols for you. SGOV is a very popular one, and SHV is one as well. These actually track short-term treasuries, and they pay you interest on a monthly basis. Think of treasuries as your cash reserve that's actually working for you. So instead of letting money just sit idle or dead in a savings account, earning close to nothing, you can park them here and still make a solid, predictable income. Millionaires love this because it keeps their money safe, liquid, and still earning something while they sit around and wait for bigger opportunities. So while everybody else is gambling on these meme stocks, the wealthy are quietly collecting around 4% risk-free. So here's the bottom line. Remember this line that I give you. Keep it in the back of your head. Actually write it down. The wealthy don't rely on a paycheck, okay? The wealthy do not rely on a paycheck. Instead, they rely on assets. If you could change the way that you think about money, everybody's chasing a paycheck. Wealthy do not chase a paycheck. The assets pay them, so they don't need to trade time for money. So while most people are working harder for money, millionaires are making money work for them through the three streams that we just talked about. Real estate syndications, where your money buys cash flow, tax advantages, and long-term equity growth. Number two, the dividend-paying ETFs, where you collect consistent income from the world's best companies. And number three, U.S. Treasuries, your safe, steady cash reserves that quietly earn about 4% while you're sleeping. Again, these aren't flashy or risky. They're boring, but they work. Because real freedom isn't about working more hours. It's about owning assets that never clock out. And if you're serious about replacing your active income with passive income, one of the most powerful ways I feel that you can do this, because I've personally done this, is through the number one that we talked about, real estate syndications. And remember, this is where you get cash flow, appreciation, the property's going up in value, and huge tax benefits without being a landlord. I made a full video that breaks down exactly how these work, how you can invest passively, and how I've used them to get to the point that work is optional. As a dentist, you can just click this next video to watch it now.